Roads, airports and schools. When we think of infrastructure, we don't normally assimilate returns in excess of 16% with minimal volatility. But for some fund managers, that's pretty normal.
Infrastructure assets are what we call essential services assets. And these are assets that people have to use on a day in and day out basis. And because of the nature of the services that they provide, infrastructure assets often tend to be less influenced by economic factors. And then secondly, infrastructure assets can offer a steady, stable, consistent level of income yield. And that's because the revenues that infrastructure assets generate are often underpinned by regulatory frameworks or by long-term contracts. One of the assets that we invest in our portfolio is a group of 6 schools that are located in and around an Australian state's capital city. The state government pays us a fixed amount every quarter for the next 23 years.
Based on our analysis of the 43 infrastructure funds on Financial Express, AMP's Core Capital Infrastructure Fund had the least amount of volatility. But when it came to performance, it was ranked the 6th best performer and generated 16.10% year to date, while Amiga's Global Infrastructure Fund took out first place with 19.27%. AMP Capital's Core Infrastructure Fund was also one of 4 infrastructure funds that received Financial Express's highest rating of 5 crowns. But AMP Capital says their Core Infrastructure Fund is quite unique, as it holds about 50% in listed assets and the other half in unlisted assets.
One real standout is our investment in Melbourne Airport. Melbourne Airport has been experiencing extremely strong levels of passenger growth.